Now, credit markets are set for their worst year since the global financial crisis as investors abandon hope of a late 2018 rally. Bloomberg Barclays Index indicates high yield and investment grade notes are headed for losses in both euros and dollars. The first time all four asset classes have posted negative total returns since 2008. Joining us now, I'm very pleased to say, to talk about what dominates thoughts in boardrooms stateside, including this subject, Charles Otton, co-head of the UBS Industrials Group. Charles, I feel like the bringer of doom this morning with all this negativity around credit markets. But let's talk about this. GE clearly putting this very much front and centre for many people. But for somebody who's in and out of these boardrooms all the time, is this something that preoccupies companies? They don't want to lever up too much and expose themselves to higher interest rates.
Yes, I think it is. And thank you for having me, Anna. I think in the private arena, you see a tolerance level for leverage at a higher level. So you have many private equity deals being done in the 6 to 7 times EBITDA leverage arena, and that's a backward-looking measure. If you're a public company, you tend to be a little more concerned about forward-looking leverage, and that number comes down a little bit to around 4 times. GE, as you say, is a good example of a dominant theme in the leverage markets. There's a huge issue as to whether or not it will stay investment grade or move into sub-investment grade, and that's a lot of paper to move into the sub-investment grade market if it happens. Yeah,
and is this something that's going to limit M&A or share buybacks by companies that you talk to into the future?
We don't know yet. Good question. I think we've seen backing up of the markets the last few days. The second lien market seems a little stretched at the moment. So it's unlikely we'll see substantial things happening between now and the end of the year for this reason if it involves a lot of leverage. We have seen a very, very large amount of buybacks. That tends to be the most dominant use of cash at the moment, or the sense is that that's the greatest use of your own cash if you have it. We were seeing M&A being rewarded very, very well a few years back for bold moves into new areas. What we've seen recently is really a negative reaction. Colfax is the best example, maybe this week, of a negative reaction to an M&A move. So buybacks have been strong. In a stressed leverage market, maybe that's dialed back a little bit. I've
got the function MA Go, which is the sort of M&A tracker on the Bloomberg. And if I just set it so it shows what we're doing on M&A year to date, it shows North America up by, 20% in terms of value year to date. But what kinds of M&A then are we talking about companies being focused on? Because for years, businesses are put together as conglomerates, and then investors don't like that anymore because they want to pick their own very niche players, I suppose. Are we still in that theme? Are we still in the theme where businesses are getting rid of assets that don't fit their core?
Yes, we are, and it's the activists that's driving a lot of that. The deconglomerization, if that's a proper word, is a dominant theme. It is now a dominant theme. We've seen, and GE's a good example, many others, companies who have not responded well to being labelled as a conglomerate and have taken steps to unwind. Sometimes the activist pressure is very blatant, sometimes it's much more subtle, and I think people are rediscovering higher multiples as they unwind, and we'll see more of that.
Help the boardrooms in Europe understand how you deal with activist pressure, would you, Charles? Because this is something you've seen in the United States for a long time. It's a little more nascent in Europe, although it's here with a big presence now. You point out to me in your notes before we chatted that it comes in different forms, this kind of pressure. Sometimes it can be quite gentle and constructive, and other times it can feel more like a sledgehammer.
Exactly right. And the companies we find deal best with this respond in a listening and a thoughtful way, and acknowledge sometimes the points that the activists have and try to work with them. Those that tend to hit them head on have a more complex and sometimes more uncomfortable time. And so the activist is merely there to declare victory in terms of an increased share price. So if they can achieve that in a more subtle way, then they'll do that. And we've seen that morph in the US, and people can declare victory now in a number of different ways.
And one other subject I wanted to ask you about, Charles, if we're seeing US corporates' balance sheets being tested by higher interest rates, maybe a little less able to do M&A, we'll see. What about Chinese buyers? Do US corporates remain open to Chinese conversations, or are they put off by President Trump's rhetoric around what kind of scrutiny they'll get from CFIUS and the like?
Well, you have CFIUS, you have Trump, and you also have this phenomenon in China, loosely labeled concern about the grey rhinos. So these large conglomerates who were buying significant businesses and now have been perhaps reined in a little bit by their own authorities. So there is some caution in the US about selling to a non-US buyer. And that's manifested both in terms of caution with perhaps a tweet from Trump, or more realistically, some concern that you won't get through CFIUS, which has been actively slowing down the approvals in the same way that you've seen some of the US deals being slowed down approval-wise in China.